Which is the best dividend stock to buy right now? Is it Pepsi stock? Is it GM stock? Or is it AT&T stock? I'm going to answer that question in this video, comparing the three dividend stocks across four financial metrics, beginning with the dividend yield. So let's get right into it. Pepsi offers investors a dividend yield of 2.42%. GM offers investors a dividend yield of 0.82%, and AT&T offers investors a dividend yield of 6.28%, the highest dividend out of these three dividend stocks. But remember, as I usually say, when you invest in a dividend stock, you're not only getting the dividend yield, but you're also exposed to the risk of fluctuating stock prices. So what happens to the stock price is also important, not just what the dividend yield is. So it's important to consider the next three things I'm going to show you here. Starting with the revenue growth. Looking at revenue growth over the last decade, we see GM having the highest annual revenue growth in the most recent year at 23.4%. And I feel GM has another year to 2 years of robust revenue growth ahead of it as consumers unleash pent up demand for cars. Remember, during 2020 and 2021, there was a severe shortage of new and used cars that caused a lot of buyers to stay on the sidelines, keep their existing cars for longer than they would like to because there was a shortage. Prices were higher, dealerships were asking thousands above MSRP. So people said, you know what, no thank you, we will wait until the industry comes back into equilibrium, then we will come back into the market. And so that's going to bring a lot of new buyers into the market here in 2023, in 2024, and probably to 2025. GM's also got the investing in the EV segment, so it's got another tailwind there. Pepsi's been doing a phenomenal job benefiting from the stay at home trend. Its snack segment surprisingly does better than the beverage segment. It's a more important part of the company overall, and since people have been staying home more often, the company's snack and beverage segment has been thriving because you're closer to your kitchen, you go over and you grab a snack more often. AT&T, the revenue decrease is mostly due to the divestiture of its direct TV business. AT&T, not like the other two dividend stocks here, doesn't really have a tailwind that's going to boost revenue in the near term. You could say the 5G technology is bringing on some new customers, but that's a slow addition. And at the same time, AT&T is facing a newcomer in the industry. Well, I shouldn't say a newcomer, but a disruptor, I can say, in T-Mobile that's offering lower prices than AT&T and Verizon. The next thing I wanted to look at, which is one of the most important things for me when I'm looking at investing in a dividend stock or any stock for that matter, is the operating profit margin. And looking at this metric going back a decade, AT&T has the highest operating profit margin most recently at 19.29%. Pepsico coming in second place at 13.4%, and finally GM at 6.65%. Although I will note one thing, GM's operating profit margin has improved very nicely over the last decade, moving steadily higher. Look at where it was in 2013 at negative a couple of percent, and now it's all the way up to 6.65%, and it keeps grinding higher as the company is doing better and better in its operations. The final thing I'm going to compare these three dividend stocks on is their valuation. How expensive are these stocks? And looking at valuation, Pepsi is the most expensive, more than 3 to 4 times more expensive than the other two, trading at a forward price to earnings of 23.92. AT&T trading at a forward price to earnings of 7.1, and GM is the cheapest, trading at a forward price to earnings of 5.24. So if I had to pick one of these three dividend stocks to buy right now, I would pick GM. I like GM's prospects over the next couple of years as consumers need to make up for that pent up demand to buy cars, and they're having to pay higher prices because with the limited inventory available, they're just going to have to be paying higher prices. They don't really have a choice because if they need a car, they got to buy it at a higher price. We don't know when inventory will come back into equilibrium, but in the meantime, GM stands to benefit from those trends. All right, that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership, and I really hope that I can see you again sometime soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.